When I tell y'all I just woke up, I tell y'all I just woke up. Let me pin this link in. There you go. All right, the link is in the chat. 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 I'm awake, Robinson. I see your comment right there. Talking about somebody wake Tim up. I'm awake. Refresh your page. How about that? Good morning, good morning, good morning, everybody. If this is your first time tuning in to Tim's Tidbits, I like to say welcome. If it's not your first time tuning in, I still want to say welcome. Give you a nice hearty, well, thank you for always hanging out every single day with me and the homie Spidey back here. Spidey, he's chilling by the window. Woo, 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 woo. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Algo's internet every single day and talk about the price action. I do it for free to help people like yourself get their aha moment when it comes to trading, investing, all things stock market. Show people what a full-time trader would do in any situation. Yes, I am a full-time trader. So I get on Algo's internet and share what I foresee in the stock market using ICT strategies because that's what I use to trade in the hopes that the way I explain it helps someone get their aha moment. That's the whole spiel bill. That's the whole spiel bill. If you want to see the nitty gritty, you got the ICT lingo playlist, ICT price action playlist. This is where I break down the lingo you need to trade ICT strategy. This when I break down how I find it in the price action, and gems from the live is just the chunks from the live videos that I think are important, or someone says, hey Tim, make this a gem, and it'll be in this playlist. You can go there and look at a bite-sized video and not have to sit through an hour, hour and a half, 2 hour long live trying to find the gems, find the important pieces. It's all in there. Part 3 to the ICT concepts explained is coming soon, sometime after the holidays. That's going to be strategy portion. If you go to the ICT concepts, any of the video in there, you'll see a link in the description called download slides. Takes you to a Google Drive folder. You can download the slides. You can download the PIM chart, right? The PIM chart, that's the PD array matrix that ICT created. We got a DR, IDR tracker spreadsheet that I created. If you're interested in DR, IDR, we got the weekly goal calculator. Shout out Robinson for making it more functional, right? In order to download any of this stuff in this folder right here, don't come over here and try to download. It's going to make you send me an email saying that you don't have permission. Once you open it up, go to File, make a copy, and there you go. Make a copy. It's going to save it inside your Google Drive folder. That's how you download it. Don't try to click download. Open it up, File, make a copy, then make copy, and it'll save it to your Google Drive folder. Or just browse through and find your computer. Where is it? Make copy. And just right here is where it says folder. Just go through and look for find my computer and save it wherever you want to save it on your computer. There you go. Thank you. Stop sending me the emails. Let's go see who in the chat. Let's go see who in the chat. What's up, Rhonda Green? Setting records. Okay. What's going on, Mendez? Y'all, hold on. Let me go talk to her. Hello, Anna. Hello, Elsa. How are you doing? Oh, really? That's nice. Okay. Tell mommy I said hello. What's up, Mendez? Mendez family. What's up, Wave Trader? What's going on, Robinson? I am here. What's up, Fishbone? What's up? Hey, Chief. Hey, Chief. It's the link at the top up there if you want to click on the link. Michelle Tucker. What's going on? What's up, Angela? What's going on, Hefe? What's going on, Hefe? What's going on, Raymond? What's cracking? If you want to click the link, it be it to the top of the chat. You feel me? What's going on? DXF DFX. What's going on? Hey, let's go ahead and get to it, man. Let's get to it. Since we're on Al Gore's internet, let's go out here and holler at our homegirl Spalene. If y'all don't know who Spalene is, that's the SPY, S&P 500, whatever you want to call it. We wrote a song for you. Want to hear it, go. Spalene, Spalene, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Spalene getting ready to gap down. So I'm assuming that the algos did not like the what's the name? I'm assuming the algos did not like the GDP numbers. Boeing has soared 60% in Q4, and these aerospace and defense ETFs went along for the ride. Okay. Billionaire hedge fund manager David Tepper leaning short equities. Okay. He's leaning short equities. No recession, no rate. We saw that one. We saw that one yesterday. Okay. Let's go see what is going on. What's going on? Thursday. 2.9 was expected, and it went up 3.2. Unemployment 216. Okay. So looking at this right here, let me see. Final GDP price index 4.3, 4.4. It's relative in line. So since the GDP went up and was projected to be 2.9, I'm assuming that they don't like it because they probably feel like the Fed gonna continue to tighten. Previous list actual preliminary release. Therefore, historic data will appear. The three versions of GDP release, month apart, annual, preliminary, and final. Remember when I was looking for this the other day? This is it right here. This is where I saw it. When I was like, man, I read that somewhere before. It was on Forex Factory right here. You're right. It was on Forex Factory where I saw it at. But anyway, say there are three versions of GDP released a month apart: advanced, preliminary, and final. The advanced release is the earliest and thus tends to have the most impact. Right there. That's when I was looking for that one. And I was like, man, I can't remember where I read that at. But that's it right there. I read it on in the footnotes on Forex Factory. Right there. Right there. Right there. So maybe we just went down to take care of some stuff because it's take care of some gap work. Because everything, I guess they feel like, hey, since the economy is still strong, the Fed probably gonna get more aggressive. Third estimate of GDP expect to show no change from growth of 2.9% in the quarter. Second estimate, personal consumption expenditures, and also expect to be unchanged at 1.7% growth. Gross domestic product represents the total of the country production during the period. Blah 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 blah. Household purchases count durable goods such as furniture, cars, non-durable such as clothing. Okay, yeah, we know what it is. Net exports equal to sum of imports. We know that. The GDP price, comprehensive indicator of inflation, is typical. It is typical lower than the consumption price index because investment goods, which are in the GDP price index but not in the CPI, tends to have lower rates of inflation. Note that the contributions of each component as the average over the period year are tracked in the table below. Blah 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 blah. Okay. GDP is an inclusive measure of economic activity. Investors need to closely track the economic because investors in the stock market like to see healthy economic growth because robust business activity translates to high corporate profits. Bond investors are more highly sensitive to inflation and robust economic activity potentially pave the road by tracking economic data such as you investors will. The GDP report contains treasure trove of information which not only paints an image of the overall economy but tells investors about the importance of the big page GDP. Okay, business and residual information and price index, which can translate to investor opportunity, kind of gross demand product, most company interpretation. Okay, when gross domestic product, I should have came down here first. When gross domestic products expand more rapidly, the potential that is potential. Hold on. When gross domestic product expand more rapidly, that its potential bond prices fall. Healthy GDP growth usually translates into strong corporate earnings, which bode well for stock market. For okay, yeah, I just wanted to make sure I was looking at it right. So, like I said before, maybe because it since it was good and the job numbers were good, the algos probably slid to the downside because it's like, hey, the Fed want the stuff to slow down and the market is still good. The job market is still strong because they expected it to be unchanged, both of them to be unchanged, and it grew, it expanded, right? They expected it to be unchanged and it expanded. And then with the what's the name? Then with the job numbers, unemployment claims, they went down. See, they expected to be 221 and they went down. So less people file unemployment. So the job market is still strong because less people file for unemployment. So that is not going along with what the Fed wants. So it probably spooked the algos to the downside. And see, it's one thing I would like about Econo Day right here. Okay, so in the prior, it was 211,000. Prior revised was 214, right? So this time they expected 225,000, and then it was actually only 216. Job claims for December 17th are expected to come in at 225,000 versus 211,000 in the prior week, right? So they was expecting a whole lot more to come in and actually did, but that's a good thing. But we see the reaction by the algos because it's like, hey, the Fed want everything to slow down. So it's probably spooked the algos. Now, once the market actually open up, let's see how it plays out. Will we continue to dump? Will we get scenario 2? I mean, bear scenario 2, or will we get? Oh, that's the void. I'm like, what's that red line? Will we get bear scenario 2, or will we get bullish scenario 2? Which one will we get for the week? Which one will we get for the week? Let's see. We're at the news. We're at the news. So let's see which one we get. And since we got the ES pulled up, it brought us right back to equilibrium. The algo brought us right back to equilibrium on the monthly. Right? Came really close to this this daily high. Let's see how this play out. All right. The algos came down, brought us right back to equilibrium, brought us real close to this daily high, which would eliminate having a fair value gap. We do have a volume imbalance down here. We do have a volume imbalance down there. Got a volume imbalance down there. This is, whoa, I ain't update this in forever. Let me fix this. Okay. We did take out yesterday's high. We did take out yesterday's high overnight sometime. Don't know when we took it out. Y'all bear with me while I fix this. Bear with me while I fix this. Okay. Got that fixed up. Sorry, I went silent on y'all just then. Sorry, I went silent on y'all this just then. Okay, let's drop down and look at the see what's going on. We'll look at the DR ODR in a minute. We blue slap through that hourly order block. We we bounced off of this breaker once, twice. Then when news opened up, see how did we do? Yeah, when the news opened up, we just started to tankety tank. We tankety tanked, and now we're consolidating right at equilibrium. Okay, so we tanked, and now we consolidating. That's giving me down vibes. That's giving me down vibes. That's giving me down vibes. But you never know. We'll see. We got a tank consolidation. That's giving me the vibes going toward that low. Let's see if we go get that low. It's giving me down vibes. That's giving me down vibes. And plus, we got that gap that we made the other day, that full gap up. Let's see if we go and get it. Let's see if we get the down there, get that low. Well, let's see how it plays out, shall we? Okay. Let's look at the price action. So, and then we'll go look at the DR, IDR. So we closed over here at 3906.50. We closed at 3906.50, and we just kind of did a whole bunch of nothing. We pushed up slightly. We took out yesterday's high on the 930 candle. Right, we took out yesterday's high on the 930 candle. That'll be the 915 candle on Trading View. Right, so we took out yesterday's high on the 930 candle. Then we consolidated, did nothing, opened up midnight at 39.18. Started to sell down a little bit, came down to this 15-minute fair value gap, was just consolidating there. And then at 3:30, which would be the 3 o'clock candle at London. Let me see, just after London open, right at 3:30, which will be the 3:15 candle on Trading View. We spiked up, did not take out the high. We spiked up, did not take out the high, spiked up, and then rejected hard, and then proceeded to sell off after that. Selling off, came down close to the breaker, pushed back up. We came here, set an order block, came here, set an order block, pushed up to this small fair value gap, dropped down again, pushed back up to this fair value gap here, right? Had a breaking market structure to the downside, pushed back up to the fair value gap, sold off, came down to the breaker, and this 15-minute fair value gap. The market is open. The market is open. The market is open. If you have to go trade, please trade safe. If you're not going to trade, please take copious notes so you can go back and study what you saw today. And do me a favor, hit the like button on the way out the door. Well, thank you. And then when the news came out, we'll retrace to this fair value gap here. Then the news came out, and we dropped it like it's hot. Came down right here to this order block, 15-minute order block. Came to the bottom of this 60-minute order block, and then paused for a second. Then we continued down, bringing us right back at the monthly equilibrium as we spoke about. We consolidated at the monthly equilibrium. Then we pushed down when the market just opened. And that's where we at now. Came down through that fair value gap. Now we're right here testing this 15-minute order block right there. Very close to yesterday's low. We got is that yesterday's low right here? No, that's the 20th. That's Tuesday's low on here. Oh man. How did I get that marked as Tuesday's low? I got yesterday's low. Well, Today's man, y'all could tell I was mad. I was out of there. I was out of there this morning. When I came here this morning at like 5 something, look what I did. Look at what I did. I marked today's high, right? And oh no, that's yesterday's low. Cause that's okay. Nah, I did the right thing. But I marked today's high and yesterday's low. Okay. Yeah, I did the right thing. I thought I was tripping. It just made the low late that night. That's what it was. It made the low late that night. Okay, so I'm tracking. It made the low late that night. Yeah. So that is yesterday. I was in here at like 5 something. No, it was like earlier than that. Might have been like like 5 something when I was in here. We dumping, looking like we pushing to go get that low. Looking like we pushing to go get that low. While we watching to see if how far we go after we get that low. Because we took out yesterday's high. Now we've come back down, gunning for yesterday's low. Right. Once we take out yesterday's low, that's going to have us in a discount on the daily. It'll have us in a discount on the monthly, and we're also in a discount on the weekly. Let's see how it play out. We got weekly equilibrium. Weekly equilibrium is up here at 39.93.75. The equilibrium from yesterday, daily equilibrium is 38.87. And then the monthly equilibrium, of course, is right there at 38.72. Right? So once we take out these lows, let's see what kind of setup it give us. Will it give us a setup to the downside or the upside? And speaking of setup, let's go and see. All right. Everybody's moving together. Everybody's moving in unison right now. Again, the NQ never took out that high that the ES in the Dow took out. Um, the Dow is still the strength leader. It's on gas. The NQ, man, NQ close to this. What's that? Tuesday's low. Yes, NQ is not far from Tuesday's low, but the ES and the Dow miles away. The Dow like 500 miles away from Tuesday's low. Look at that. Look how weak the NQ looking. NQ looking mad weak. NQ looking mad weak. The Dow strength leader. NQ. Did NQ already take out yesterday's low? Man, I got all kind of lines on here. It did. NQ took out yesterday's low already. That's why I'm like, NQ looked like it took out yesterday's low. The ES getting close to yesterday's low in the volume imbalance. The NQ trying to take out Tuesday's low. And then the Dow still hasn't taken out yesterday's low is getting close. The ES still hasn't taken it out. We got up under these equal lows. There it is. About to get it. That's why I was like, man, that's giving me down vibes. The how we came down, consolidated at equilibrium. That was like a continuation move. We got below all of these equal lows here. Go ahead and knock out that low so you can tell us what you want to do. It's only 9:36. 6 minutes into the day. Hopefully this won't be the only move of the day. Below that. Hopefully this won't be the only move of the day. That's bringing us back. We got an hourly order block here. Hopefully this won't be the only move of the day to give us something to work with. Sorry, y'all. I ain't even look at the chat. I didn't even look at the chat. I'm sorry. Let me go see what y'all talk about in the chat. What's up, Seawalk? What's up, Valdez? Buenos dias. What's up, Sanjay? Cool it now. Ooh, watch out. What's up, Cool it? What's going on, Hines? What's up, Kyle? Oh, y'all ain't talking about nothing. Ain't nobody saying nothing anyway. Appreciate y'all for tapping in. Okay. Okay, we hit this order block. We hit this hourly order block close to the low. Come on, let's do something, shake something. Go ahead and get that low. Go ahead and run that sell side. NQ took out the low. ES is flirting with the low. Dow still got a little piece to go. Dow is the relative strength leader on the day. So we have completely reversed on the NQ. We reversed everything from yesterday. We've reversed everything from yesterday so far in the first 9 minutes of the market. Well, no, I ain't gonna say 9 minutes of the market. These are the future, so it's like all night. This is an all night thing. So correction, I changed that. This is an all night thing, but we have reversed everything from yesterday. Oh, let's go look at the DR and IDR. That's what we're supposed to be doing. We've taken out this yesterday's low on the on the ES. We have taken out yesterday's low on the ES. Doggone it toward it. Dow push it toward it. Let's see if we get it. Man, where's the... Be easy if I just did it like this. By the time I do this right here, it's gonna be done. How in the world did it get over there? 2020. What? How in the world did that happen? Where did that happen? 2023. do not know what's going on. I do not know what's going on. God dog it. Driving me crazy. Okay, finally, 4 years later. Golly. Okay, so we've taken out the low. We're at this hourly order block. Now, for anybody who don't know how I trade ICT concepts, once we get to an objective, right, sit back and I wait to see what the market is going to do, right? So now, last night we took out the highs, right? Took buy side, and now we've come down and we've taken sell side. Whenever we take buy side or sell side, I actually look for the market to come back to at least equilibrium, maybe into a premium. I mean, a discount, right? To look for a trade entry, right? Came back to equilibrium. The news pushed us into a discount. There's no trade opportunity over here. There's nothing to trade off of there. Algos went down, took out sell side. Now we have taken sell side. Now that we've taken sell side, start looking for the opportunities, right? Let's look for the opportunities. We've blown through this breaker. I take that off, right? Remember, we got the wax on for this hourly fair value gap. We got the wax on. Still looking for the wax off, right? But I'm gonna move it over here to this hourly fair value gap, and just keep in mind that I'm looking for the wax off for this hourly fair value gap over here. I don't like a whole bunch of stuff overlapping on the chart. It be driving me crazy, right? So now we got this order block that has now turned into a breaker. It's a small little move, but this low right here, we came down to this low and it broke this high. We traded back down through it. So now that's no longer an order block. Now that's a breaker. Boom. Right. So now that's a breaker. So now we got a fair value gap, a breaker, right? Right there around equilibrium. So now we got some PD arrays to get through on the top above price. So above price, those are the PD arrays we got above price, right? And then there's another small fair value gap right here at yesterday's close. We'll mark that out. Oh, wait a minute. Let me get the mark my open. Mark my open real quick. So we open up way down here. All right, the New York Open was 38.72.50 on the MES. Yes, 38.72.50 was the New York Open on the MES. All right, so That's a whole we got a nice little liquidity. I ain't gonna mark this because this whole move right here is a whole liquidity void there from this 5 o'clock candle all the way down to where we are now. This is just a huge liquidity void. This is a huge sell side imbalance. So I'm not gonna go through and mark out air because it's a fair value gap there. It's a fair value gap there. Um, and then it's a fair value gap here. So I'm just gonna mark this biggest one, and I'm gonna mark this biggest one, and call it a day. I'm not gonna mark out all of them. Just note that we got a huge this entire rundown is a huge um sell side imbalance. Instead of trying to mark every little PD array. Okay, below price. Um, don't think we have below price because prices here. We've come down into this hourly order block. We got a prior low here. We just took out sell side liquidity, right? And we're getting a reaction off of it. We do have a prior low here. It's not really significant, so I'm not gonna mark it. Um, we have an order block here. Got another outlet order block there. Again, if you don't know what constitutes an order block, when you come down to an area of support, you come to it or through it, and this fair value gap is the area of support that I'm looking at. And then you have a heavy distribution in the opposite way, and the last down close candle, right, constitutes the order block. So you got an order block there. So we went up. We said an order block came up, um, pushed back down, reacted off of it, came back down, set another order block, and now we could potentially bounce off this order block or come all the way back down to this order block before proceeding back up, or we could just continue to slide down. The Dow still has not taken out yesterday's low. The NQ and the ES has taken out yesterday's low, as we discussed already. The Dow is trying, but to no avail. The NQ is getting real close to Tuesday's low. Now, for the 19th time, let's go look at the PDI. Okay, so on the ES, we've came down. I mean, on the SPY, we've come down into that liquidity void. I mean, the volume imbalance. I said liquidity void. We came into the volume imbalance. Right, we came into the volume imbalance on the SPY. Took out yesterday's low, and we took out the high, and then we took out the low. What time did we take out that high? Did we go up while I was talking? Oh, no, that's the ES. That's the ES I'm looking at. That's not the SPY. I'm like, wait a minute. When did we take out that high? Let's go to the SPY. Okay. Why y'all ain't tell me I wasn't looking at the SPY? Okay, on the SPY, we've come down, and we filled in the gap up. We're pushing down. Still haven't quite got to Tuesday's close, which would not leave any type of volume imbalance between these 2 days, between Tuesday and Wednesday. If we got all the way down to Tuesday's close, let's see how that work out. I ain't got nothing. I ain't had nothing. I ain't had nothing adjusted around here. I ain't have nothing adjusted around here. Cause that was yesterday. And that was the week. Getting close to the monthly equilibrium on the SPY. Getting real close to the monthly equilibrium on the SPY. We gonna get to the what's the name in a minute. I ain't got none of my charts updated properly. 394.17. I guess y'all like, why did you just waste your time doing that when we've cleared all that already? I don't know. I can't help it. I can't help it. Will we get down to that 38 and 55? Let us see. Let us see. Okay. ES now. Let me see here. What did y'all say? SQQ calls 53 stop order in place. That's what's up. Congratulations. Are we going to a bullish rejection block on the daily? You said bullish rejection block on a daily on what, the ES? Right here. Potentially. That would be considered a rejection block down there. If we get down there, that is a potential rejection block. Right there. The super long wick there. Now, just the only thing about this right here, because we took the sell side and we reacted off of it. The only thing about this rejection block right here is that it's so close to these equal lows right here. It's so close to those equal lows. I'm looking like, do the algos really want those? When we came there last time, we got a nice, you know what I'm saying, rejection off of this. What was that? That lower time frame fair value gap. It was like a 4-hour fair value gap that we came down into. Got a nice long wick there. Right after taking out that sell side. So yes, we are come. This is a potential rejection block right here. But let's see how it play out because it's so close to this right here. IDK, we have reversed all of yesterday. Now let's finally get down to the DR, IDR. I'm assuming that the DR showed down on the New York session. I mean on the London session. I'm assuming that it showed down on the London session. And it did right here. It did. Yeah. Gave a down confirmation. Let's go back and look at the Asian. So the Asian had an up confirmation, and it just skated along the top, had an up confirmation, and then it struggled with the DR high. Never really got a nice clean breakaway. So it gave an up confirmation, didn't give an IDR, went straight to a DR confirmation, but never got a real clean break. Struggled, came down, did give a small move, but it never made a new high. It just kind of struggled along the top. And then we broke down, got a close below the 50%, got the retirement trade based off of that right there. If you took a retirement trade on that, giving it back to the top, that played out for you, right? Because it got a closure below the 50%. Came down to the open, came inside this fair value gap here. It didn't come to this fair value gap, but it came back to the open of this DR range, right? And then if you took a retirement trade off of that, then that played out if you gave it back to the DR top. Even if you gave it to the this high here, you gave it to that high back here, you were disappointed. So on the London, let's look at the London Bridge. London Bridge is falling down, falling down, falling down. So London set the DR range. Then we got we went straight, got a DR confirmation to the downside, no IDR confirmation, straight DR confirmation to the downside. Got a nice push back in. Didn't trade to a fair value gap or anything on the 5-minute. We took out short-term buy side on the 5-minute. Took out short-term buy side on the 5-minute. Had a small order block there, but we blew through that. There's no real trade right here. We got a fair value gap here that you could say if you took this fair value gap. If you took it off this fair value gap, then realistically you would have been stopped out because your stop would have been here. But if you gave it a point above, so where that is, 1975, 1475, you were good. If you do it a point like I do. If you took it off this fair value gap, give it a point above the swing high like I do, this would have made you do the whole pucker, but you would have been good on the short right there. So coming off of this fair value gap right there, that is a successful trade for the London, which yielded more than 10 points. If you gave it 1 point above the high like I do. So that is a successful trade. If you was waiting for this fair value gap in the premium, you were disappointed. It didn't get picked up. So then we sold off, and now we're in the New York, and we're setting the range. It's 10. We got 30 more minutes before this range is finished. Virtual therapy may not be enough to nurse teledoc wounds. Wall Street sees lower open as economic data renews rate hike worries. Right there. That's what I was saying. That's what I was saying when I was like, the economic data is good. Like the economy is still growing, it's still expanding, and the initial jobless claims are going down again. So it's like the Fed want everything to slow down. They want it to slow down. They want the jobless claims to go up a little bit. So now we're at that point where this good news spooked the algos. This good news was bad news for the algos, cause like they say, Wall Street sees lower open as economic data renews rate hike worries. So it's going against what the Fed want. And that's what I be talking about, like understanding the narrative. Like, what does the Fed want? You know what I'm saying? This is why I be like, I don't really care about this stuff, because it's all based on, there's no clear-cut way to say, okay, if GDP good, we gonna take off, or if GDP bad, we gonna drop. There's no clear-cut way to say that. It's about the narrative. It's about what the Fed want. You know what I'm saying? So that's why, as long as you stay in tune with what the Fed want, then you can anticipate what it's gonna do once the news comes out, and look for your trading opportunities in there. So that's the DR IDR for the overnight. We see here the Asian session. It gave a confirmation to the upside, but it never really gave a retirement trade here. So I guess we can count this as a success too, because it did give a retirement trade. That's a strategy that the master teach. It gave a retirement trade back to the top. Let's see what that is. If you took it off this fair value gap, 11, you needed it to hit 21. Nope. That's not a success. That would have been a failed trade. It was a move, but I only count the ones that's 10 points or more. For the way I'm doing it, this just did. So again, remember, this did give you a retirement trade up to here, but for how I'm tracking it, it needed to get up here to 21 for how I'm tracking it. Oh no, it's two fair value gaps there. So I wouldn't even got picked up on that. So that's not a failed trade for me, because you got a fair value gap there and you got a fair value gap there. So I would have been looking for the retirement trade off of this fair value gap here, and I wouldn't have got picked up. So scratch that. There's no trade there for me, but it did give a retirement trade from that fair value gap. And if you gave it back to the top of the thing, then you had a successful trade, which would have yielded you, let's say going off this fair value gap there, and giving it to the DR below the IDR, just in line with the DR, giving it back to the top, of the DR, 1.79 risk to reward. All right, so giving it to the bottom of the DR, back to the top of the DR, right there, 1.79 risk to reward. If you gave it to the IDR, it's a 2.27 risk to reward. Give it to the DR, it's a 1.79 risk to reward, which would have been, a successful trade if you took it off of that. Based off of what I'm doing, I wouldn't even have gotten a trade there. But again, that show you how it is effective, but just based off of what I'm looking at, it's not what's the name. And so let's look at the short side. Let's look at the short over here off of this fair value gap right there. Right, this fair value gap, and we gave it one. This high was, what was that? What did I say this high was? 1375. So we gave it to 1475 there, one point above the high. Let's pull out the fibs. And run some fib extensions. Okay. So that yielded 2 to 1, 3. That yielded $1 million, but based off how the master teach it, like with the fib extensions on here, you got the 0.5, 0.1, then the 1.5 and the 2, the 2.5 and the 3, right? So you got 1 standard deviation, 2 standard deviation. It popped out to this one here. So I just leave it at that one right there, because that's where it popped out to. That's just say if you took it all the way to the 2 standard deviation right there. If you took it all the way to the 2 standard deviation, that's a 4.46 to 1, right? If you took it all the way there, and then where it is now, if you had the, what they call it, the wherewithal to stay in it. If you had the wherewithal to stay in it, what's that little box there? What's that little box in the middle? Do anybody know what that little box is? That little green box in the middle right there. I ain't nobody. I ain't even gonna hold you. Nobody probably ain't real. If you just did it to right before the news came out, and then you closed it during this consolidation. Let's say, okay, you closed it during this consolidation because you didn't want to hold it through the news, right? That's 11.69 risk to reward. What's this little box that's in the middle right there? That's what I want to know. But that yielded a successful trade off of the London. It's 10:08. Yes, potential. I answered that. We also have a daily volume imbalance to the upside. Oh, the Dow took that low. The Dow took out yesterday's low. The NQ is just about to take out Tuesday's low. NQ about to make a new weekly. Was Tuesday the low? Let me go to daily candles over here. What was Monday? Monday was the 19th. Yes. The NQ about to take out the weekly low. The Dow got down, is getting down into that volume imbalance after taking out that low. NQ taking out. Why does this keep jumping to 2023? Why in the world does this keep jumping to 2023? Oh, hit the wrong button. Every time I come to the daily chart, it popped that all the way out to 2023 for some reason. Yeah, so the NQ about to make a new weekly low. NQ about to make a new weekly low. Wow, that's crazy. Is it 10:30 yet? Nope, it's on the 10. God dog it did it again. See, man, that's why then trade be getting on my nerve because of dumb stuff like this. Dumb stuff like this is why it be getting on my nerve. How it be the chart and features be acting all wild and wonky. Be acting all wonky. So we already know we took out that. So the NQ has officially made a new weekly low. The NQ has officially made a new weekly low. Ran out the sell side on the weekly. The Dow, nowhere near it. The ES is the red-headed stepchild in the middle. And we've also come down to that. Oh yeah, we melting. We trying to get all the way down now. NQ, but we might melt all the way down to a new weekly low on the ES. Cause we melting. We down to the second order block that we talked about. Then after that, there's a small order block down here. There is a small order block down here. This is actually a huge order block right here. Right there. The entire order block is actually from there to there. So let's just see what the equilibrium on that order block is. It's just going to be a meltdown day. We're coming up on equilibrium of this big order block right here, because when we took off, leaving this area, this entire area right there would be the order block after we took off like that. So just below the bottom of this smaller order block right there would be the mean threshold of this entire order block right here. So we're pretty much like right at the mean threshold of this huge order block. Then we got another one there, another one there. Took a few points off the Asian trade. London had the action. Oh, that's what's up. London was the trade for sure. Exactly. Appreciate the wake up. Appreciate the wake up. Yeah. Hey, Robinson, we about to get a trade. Wake up. Wake up, old man. Wake up, old man. Okay. Let's see how this play out. We are in the wick. All right. So we're on a daily. We are in this long potential rejection block. Again, we at this hourly order block, and then pretty much at the almost at the mean threshold of that larger order block on the hourly. So we have some confluence. Let's see if this is where the algos want to go, or will we just continue to reprice all the way down to the weekly low like the NQ did. The Dow has quite a ways to go to the weekly low. The Dow has quite a ways to go to the weekly low. The ES has a long way to go to the weekly low too. The NQ has taken out the weekly low. 1017. Let's look at the 15-minute, see if we get some more detail of what's going on. Okay. Classic repricing down. Classic repricing down. Back to that breaker. Died off. Classic repricing down. Spam risk. Just cash out Tamika. Just cash out Tamika. God dog it. Notifications be getting on my nerve, man. Cash out Tamika. Go see Moss. I just cash out Tamika. Go see Moss. What in the world is that her name? Mango sea moss. Okay. She said go see moss. She left something. Okay. So she cashed out mango sea moss. Okay. Man, Tamika got a big old forehead. Tamika, you should have angled that different. You got a big forehead. Don't put the camera up above you, baby. You showing everybody what you thinking. Going down. Y'all excuse me for a second. Yeah. Oh, that taking that picture like this right here. Because somebody told you to get the high angles. Somebody told you to get the high angles to slim yourself. You don't want to get that high angle when you got a 3 head. You got a 5 head. If you got a 5 head, you know what I'm saying? That high angle, that's gonna put your forehead close to the camera, and you use your cell phone, so that thing gonna look extra big. That thing gonna look extra big. All about the angles. She got the wrong angle on that forehead. Man, this is gonna be a meltdown day. That ain't gonna yield me no kind of trade. That ain't gonna yield me no kind of trade. It's just gonna be a meltdown day. All it's doing is melting down because it's almost 10:30 and we starting to slow down. So it ain't, you know what I'm saying? We in the Christmas time. So you just get that big move and then that's it. Just like yesterday, we got that big move and then we just consolidated. And then news trumps charts, right? We had the big move, started consolidating for the rest of the day. You know what I'm saying? Gave the impression that, hey, I want to keep going up, right? Because we had a move up and we just consolidated. We ain't move up and drop, right? We moved up, slid to the right, waiting on the news. And then we started to come back down to the areas of concern, but we had left some fair value gaps and stuff. Then the news came out and dumped. And we dumped. Mm. Got that. The NQ made a new weekly low. The Dow took out yesterday's low. The ES took out yesterday's low. Now, looking at this, well, let's see if there's a mitigation block or a breaker that's been formed. So this low broke that high. So now this has formed a breaker, right? So that has formed a breaker. But the thing is, a lot of times you got to watch. Right, this has formed a breaker now since we traded through it. But just for example, for like this breaker here or this breaker here, a lot of times what you have to watch is, oh, you know what I just noticed? It's right here, this sell model right here. Now, where does the sell model want to end? Does it want to end at this low or the actual low that it started at, which would be the weekly low? Which does it want? Which does it want? But what I was saying is, like, with this breaker right here in the middle of this leg right here, like a lot of times if we switch to a buy model right here, this breaker would get like blown through. You know what I'm saying? If we just switch to a buy model and start going back up, you know what I'm saying? Sometimes it'll get blown through. That's why you just have to watch stuff like that. But with all this other, you know what I'm saying, stuff they got, and you got fair value gaps there, breaker there, fair value gaps there. So it's like they got the potential to get blown through, reaching back for something that's at the discount. I mean, at the equilibrium or the premium, because it's setting a breaker, right? But it's in the discount right here, right? It's in the discount of the monthly, it's in the discount of the weekly, right? And it's a bearish breaker, right? So if it switch bullish for the short term, trying to get back to equilibrium, we could potentially just blow through that. But there ain't no guarantee, because it can just be a meltdown, like we seeing it's just melting down. There's nothing, no attempt to try to rally at all. There's been no attempt to try to rally at all, just been a slow meltdown. Nothing. Not even on the 15-minute. We come down, pause, come down, pause, come down. No attempt to rally at all. The algos are in full control, melting down. Looking at the 60-minute. The only thing I see on here is sell side. Again, we are at the pretty much almost to the mean threshold of this order block here. We're almost at the mean threshold of this order block right here. All right, mean threshold, marked it out. It was right around, just say 38, 33. That's close enough for government work. But that's what a mean threshold was on there. We're also inside this a potential rejection block. We have run sell side liquidity. All right, so we've run sell side liquidity. We're at an order block. We're at a rejection block. Let's see if this has enough power to stop the algos in their track for at least some kind of small retracement. It ain't giving up nothing. It ain't giving up nothing. It ain't giving up nothing. Oh, excuse me. Ain't giving no kind of interest set up for little Timmy Rogers. Ain't giving me nothing. It's hard sitting there watch this thing just die like this right here. Not have an entry. I should have woke something, man. I had my alarm set to try to get up. When my alarm went off, I could not move. When I tell y'all that Shinga shot had your boy on his back, had me on my back, man. That Shinga shot had me on my back. But I had my alarm set because I wanted to come in and see if it was going to give some kind of setup after the news drop. But let me see. It didn't give me anything. Let's go down to, like, on the 15-minute, they gave me now. Let's go to 5 minutes, see if it would have gave me anything. No, it ain't give me nothing. It ain't give me nothing. I had consolidation at the what's name and died off. We just want to melt. We just want to melt for the rest of the day. That's what it looked like. Cause man, look how the NQ just gave up the ghost. Man, the NQ just gave up the ghost, dumping. Got my chart moving up. Santa Rally who? Santa Rally who? Dumping. Is it 10:30? Okay, 10:30. We got what's name set. We got the let's check that out real quick and then I'm gonna go ahead and call it because I'm getting kind of hungry. All right, so we just hit the mean threshold. We hit the mean threshold of this area here. But yes, look like it got eyes for that weekly low, just like the NQ did. It look like it's got eyes for that weekly low. We do got some short terms sell side there, but I ain't even counting that. These little lows like this right here, when it's that close to the low, I'm like, hey, that's the objective. So turn my put it on 5 minutes and turn my indicator on. Uh-oh, not that. All right. Got a pretty big size range here. Real big size range. Mm. Got a huge range there. Can't really see it because I got so much going on my chart right now. But we got the DR bottom here, the IDR bottom. Then we got the IDR top and the DR top right there at the bottom of that breaker and all the fair value gap. Let me hide some of this stuff so it don't look so junky. I'm gonna drop down to the 5 minute. Well, wait a minute. Is that a DR top up there? Whoa, that is. That's the DR top all the way up there. Wait a minute. Oh no. No, that's the yeah, that is. What's that up there? 38.98. What's that up there? Let me see something real quick. Cause the what's the name? Okay, we got a confirmation to the downside. We got a confirmation to the downside on the DR. $38.72. 38.72.50. 38.75.50. That's what's name open. I don't know what's going on with this right now. It's not acting right. Send DR high. I don't know why it's doing that. It's acting glitchy right now. All right, so we got a confirmation to the downside, but it's just hanging out around the low right now. Got a confirmation to the downside, DR confirmation to the downside, but we're not really breaking down or taking off to the upside. See how it continues to play out. The NQ steady making lows. The Dow has paused. It got a nice reaction from that last low that it made. The Dow had a nice reaction from that last low that it made, then continued down. And I had to shift the NQ low down a couple times. The ES has paused as we see. Another day of not giving any kind of opportunity to try to get any type of a day trade. Are we waiting for the what do you say? Yep, gonna need a huge retracement to get back to DR premium. Yep. Confirmed downside. Yep. DR is the defining range. That's something that guy called the master was talking about. It's called the defining range. I have put the links to his videos and yeah, right there. Appreciate that, Robinson. Why this is doing a whole bunch of nothing right now. Let's go over to before I jump off. Let's go over here and try to see if we can see indications of what the big boys might be doing behind the scenes on us. Let's see what I want to do here. How do I want to do this? Let's look at, okay, let's go to the heat map so I can see the stocks. Let's start with the Dow since it's less stocks. All right, start with the Dow. What I'm gonna do with this right here, what I'm doing with this right here, I'm gonna look at the Dow stocks and compare them to the Dow futures and see if we can get any kind of indication of a continuation or a reversal. Let's start with Apple. All right, so and we're gonna go with see what the Dow doing. The Dow, let's put it on line chart to make it so. Okay, so the Dow made a high, made another high, made another high, made another high, made another high, came down, made a low, made a low. Okay, so let's compare. So if I change this to all right, so let's look at from October, November, December, October, November, December. So we go 3 months back. Okay, so Apple and the Dow made a high, made a high, made a high, came back, made a low, low, consolidate a little bit, highs, right there from, okay, we had some divergence right there on Apple, showing that the money was fun to come out of Apple right there. November. All right. We made the Dow was still making highs from here, from November 18th on the daily, all the way up until November 22nd. The Dow was still making highs, and then Apple has started making lower highs, closing at lower highs. Divergence. I wonder if I change this to highs, would this affect both of them? Will it change both of them if I change it to highs? Yes, it moves both of them to highs. Lows, highs, close. $9.50. Nope, that's still at $9.50. 18.3. Close. I wonder why I don't let both of them change. I wonder why I don't let both of them change. Oh, there you go, right there. Highs. Okay. Highs. Okay, there you go. Boom. Yeah, so I changed both of them to highs. And right here, kept making higher highs. And this right here was making lower highs. We should have looked at this a long time ago. We could have seen the money coming out of Apple. We could have seen the money coming out. I would have looked at this a long time ago. Let's change it to Microsoft. Get out of here, Apple. All right. So Microsoft still holding strong. They're not pulling out on Microsoft, right? They have a little bit of divergence there. Microsoft ran lows. Like, well, I ain't gonna say ran lows because I got it set to highs. But we had slight divergence there, and then toward the end of this, from November now, it's been keeping up, making higher highs. So Microsoft showing more strength than Apple right now, and over that since October. Dow up 13%, Microsoft up 0.6 over that time. Apple down 4.9. So Apple weaker than the Dow. Well, Microsoft is weaker than the Dow, but it's got more strength than Apple. It's flat over from October to now. That's the range I'm looking at from October to now. Yes. So from October to now, the Dow is pretty much flat, and Apple is down for almost 5%. All right. All right. United Healthcare. United Healthcare is up 4.3%, relatively stronger than the what's the name? So United Healthcare following suit also. This last one though, this last one they made a lower low. I mean a lower high. making highs from here, making highs, pulled back. That was some divergence there. Made a lower high there. They made a higher high. Then this had a spike up. Uh, is this a sign of maybe getting weak? Is this a sign of maybe getting weak? Got a lower high. And then, and keep in mind, these are dailies. So you're going to get a clear picture over the big move. Looking at like the daily candles. Might want to look more like at the weekly candles to get a picture of like the overall bigger move. But since we're looking at such a small time frame, stick with the dailies. What's this one? That's a big one in the Dow. Home Depot. That's a big one in the Dow. $319. $319. Okay, Home Depot. Home Depot up and stuck. Apple still tanking. Home Depot up and stuck. Home Depot is so strong. Home Depot right behind the Dow, up 10% since October. Steady climbing. Steady making Home Depot real strong in the Dow, showing relative strength in the Dow. Apple, so far, Apple is the laggard. Apple showing weakness. Another one that's got a big price tag. $111. I wish there was a way I could sort these by like the price on here. I wish there was a way I could sort them by price. Second scale. Price. There you go. Cat, $200 and something. Man, what's this over here? Goldman Sachs, $315. I'm just looking at these big prices, the ones that like really gonna move the Dow. Man, Goldman Sachs. Goldman Sachs, strong too. Goldman Sachs, strong too. All right. We got a little divergence right up in here. The Dow making higher highs. Goldman Sachs started making lower highs. But that makes sense because it was so strong. It was outperforming the Dow. So that strength, Goldman Sachs showing strength in the Dow. Who else? Cat, $235, $237. Apple lagging right now. Apple getting busted in the face. Cat, man, cat bumping. Cat up 38% since October. Cat still climbing. Cat relatively strong. Cat'll be a buy. Cat'll be a buyable pullback. If cat pull back a little bit, that'll be a buyable pullback. Up 30 is strong. Way stronger than the Dow. Man, I should have did it back in November. Look at Home Depot. Look at Microsoft. McDonald's $200 and something dollars. McDonald's right there in line with it. McDonald's right in line with it. Right in line with the Dow. McDonald's strong. So tech is the weakest in the Dow. Tech is the weakest in the Dow. Microsoft, Apple. See what Visa doing. Tech is the weakest in the Dow. Okay, Visa not doing bad. Visa's fintech. Is Visa fintech? I don't know, but I know it be in the tech sector. So Visa not doing bad. There's no obvious diversion on Visa, so it's just Apple. Microsoft wasn't really doing bad either, so it's just Apple is the weakest. So out of the ones that I went through, Apple's yellow, Microsoft is red. Yes. Yeah. So Apple weak. Apple was showing the divergence to the downside. Microsoft still pushing. So Apple, out of all the ones I looked at, Apple is the one showing the weakness in the Dow over the last from November up until the beginning of December, and it's still going up until now, making lower lows. And Microsoft still running with it. So Apple is mad weak compared to the Dow. So Apple, but everybody else doing good. I ain't gonna say everybody because I didn't check all the stocks. I didn't check. I was just trying to find the ones that, because the Dow is price weighted. So I was looking for the ones with the biggest dollar value. And then I always check Apple because Apple's such a big company. But the Dow is price weighted. So I was trying to check the ones in the Dow that's price weighted. go to the let's look at S&P, no group. All right. Okay, no group. Let's compare it to the big boys. We already know the S&P tech heavy. Ah, did I do that? Okay. October. So from October to now, yeah. Right here, the divergence started right there. Bad, bad, bad. Leroy Brown, baddest man in the whole town. So Apple sold off, and then it came down from the beginning of October. Man, I should have checked this throwback. Could have seen that weakness. Microsoft. Microsoft still holding up. Microsoft still holding up with the yes. Had a quick piece of divergence right here. And then after running lows, it picked back up in November. Start running with it. Yep. So Microsoft pretty much flat, like we said before, compared to the market. Google. Oh, 11 o'clock, y'all. Time for me to get off. Time for me to get off. Started diverging right there. So Google dropped, caught back up, and started diverging again. So Google is a mixed bag of tricks. Started diverging toward in December. Ooh. Amazon dying. Amazon dying. Talk about weakness. Whoa. Look at that. Look at that. Amazon is dying. Starting to consolidate right here. Just consolidating right here around the DR bottom. Slowly make lower and lower lows. But we done went into like a little consolidation range. We done consolidated here for 5, 10, 15, 20, 25, 30. Now we're at 35 minutes, just consolidating at the bottom of the DR range. After we got that confirmation, we just been consolidating still. No real rejection or breakthrough. Got the confirmation, push back above, came back down, push back above, came back down. Well, push back inside, came back down, push back inside, came back down, pushed inside a little bit more, pushed back out. So we just struggling right here, right now. And like Robinson was talking about for the going between the equilibrium of the range, it will have to get all the way back up here. It's a fair value gap there in the premium. Got an order block right there at the equilibrium. Came up here to this fair value gap trying to take a retirement trade. Coming back to the premium. Since it confirmed to the downside. But let's see how that play out. I'm about to jump off. Appreciate y'all just watching me look at these charts. The Dow still has not, I still haven't had to adjust the Dow low. The Dow been kind of sticking with the low that it made. The ES and the NQ slowly making lower lows, but it's not rushing down anymore. The NQ seemed to have paused temporarily, but again, the Dow still has not made lower low. That low that it made on the 11 o'clock hour is still intact. It's kind of holding right there for right now. Again, we still flirting with that DR low on the ES. You're welcome. You're very welcome, Linworth. Bless up too much things. Good morning, Good morning, Linworth. You're welcome, Mary. You're welcome, Rhonda. I'm gonna go ahead and call it. We've been on here for 2 hours. The market ain't give me nothing to try to get into this morning. It ain't give me nothing as far as like my trading style. It just was a slow meltdown. You had to speculate beforehand that it was gonna go short. Hey, Rhonda, hey, you had to speculate beforehand that it was gonna go short. In order to take any kind of options trade off of this right here for my trading style. If you trade anything else like moving averages or something, I don't know if it gave you anything, but as far as for me, after the New York Open right here, it didn't give me anything, right? At the New York Open, we melted down, right? We set a fair value gap, never came back to it, consolidated, set an order block, never came back to it, made another fair value gap, never came back to it, then got down here and started consolidating. So I was never given any kind of entry as far as options here. As far as futures, didn't give me any kind of entry as far as futures either. Nothing, no kind of entry on the day for me. The price act is just, we're just at that time where it's just either repricing up or repricing down. It's not giving no real entries. Go ahead and call it, man. I see y'all tonight at 6:30. What's today? Today's Thursday. I don't think I got nothing going on. See y'all tonight at 6:30. It's almost Christmas time. Tomorrow gonna be our last day together until after Christmas. Tomorrow gonna be our last day together to after Christmas. Tomorrow the 23rd. Then we got Christmas on Sunday. Man, tomorrow gonna be our last day together until after Christmas. I see y'all tonight. I was looking at I was just going through the indices. I started with the Dow, and I was looking for strength and weakness of the companies that's in the Dow. I was trying to go through the bigger price companies, and I was comparing them to like looking at the Dow over the last 3 months and looking at the companies over the last 3 months and see if I could see what companies had the strength or the weakness as we go into the end of the year. No, I'm not gonna miss you. And then I was started looking at the ES and looking at some of the companies to see, the same thing, looking at the strength and the weakness in the company, see which company is strong and which company is weak compared over the last 3 months. Like the last one that I was on I was looking at the ES compared to Amazon. Yes, compared to Amazon, and I had it set to the highs. So the ES has been consistently. It has been consistent. This is where the divergence started right here. It's clear, right? So the ES have been making higher highs from October 26th up until December 14th, and then Amazon has been making lower highs during that same time. So it's like Amazon is super weak. You know what I'm saying? Amazon is the weakest that I looked at so far. Apple was showing weakness too. Microsoft was showing strength. Google was showing, it was a mixed bag. It just started getting weak at the end. But I was just going through looking at the daily charts and looking at, since the index had been trending higher, I set the index to show me the price on the highs, and then I set the company to price on the highs too, because the index has been trending higher. So I want to see what companies are not making higher highs at the same time as the index, right? So that's what I was just going through, looking at those right there. The last one I was on was Amazon compared to the ES. Okay, yeah, thanks. I appreciate you. I don't want to be on a Christmas list. You ain't put coal in my stocking, but you left us enough, Jim, to study over the holidays. Appreciate it. And then shout out ICT. I first heard about this from my financial advisor, Dustin. Right? He always talked about looking for the strength and the weakness in the sectors. Right? He would do classes where he was looking for, he said, the way you build a watch list is to look for the strength and weaknesses in the sectors. And then if you want to buy strength, you look at the companies that are stronger, and then when they give you a pullback, you buy that pullback. And if you want to buy weakness, you look at the companies that are weak, and when they start to rally, when it rally on the next pullback, you buy it if you want to buy weakness, right? And then I saw one of ICT videos where he was breaking it down with the divergence like that. So it's kind of like a mixture between Dustin and ICT, where I learned how to go through and look at the companies based off of because ICT do it based off the index and Dustin do it based off the sectors. That's how he do it. So it's like kind of like and it's easier for me to do it based off the index than to try to go through each individual sector. So I just look at the index that company is in and compare it to the index. And you can do the same thing with ETF. Like if you want to compare it to like a ETF, like a sector ETF, you just, pull up XLC and then go look at the companies that's in XLC compared to, and you see if it's stronger than the index. I mean, the ETF, weaker than the ETF, then you can get a picture of how it go. Tim, I'm leaving, but let me repeat what I just said for the past 30. Touche. Touche. Y'all thank Robinson for me not answering no more questions. Y'all thank this guy right here. This guy right here with the Sprint operator Bluetooth in his ear. Right, this guy right. See that look right here. This guy right here. See that Sprint operator Bluetooth in his ear right there. Thank that guy for me not answering any more questions. Hey man, I'll see y'all tonight at 6:30 for the price action recap. Hopefully I was able to share something of value with somebody. I see the rest of y'all except for Robinson tonight. Go, man.